But I want to look at Max Financials, the ET Now impact, just to break it for our viewers. The Max Financial, Analjit Singh of Max Financials, he did not deny that Axis Bank could be looking at increasing their stake either in Max healthcare business or the holding company. He said, look, he cannot commit anything because he's under an oath, but there was not an admission, but there was maybe some indication that really could be the natural way for go as far as the Max franchise and the Axis relationship is concerned. Vikas Khemani is ready. Let's connect with him and let's talk about markets and let's talk about how is he protecting his capital in this kind of a market mayhem. Because it's great to talk about long term. It's great to talk about, okay, India is a great destination for a 3-year investor, for a 5-year investor, you will make money. But the problem is that if you don't get realistic about the lay of the land and about what is happening to the economy and what is happening to the sentiment, then you are losing your portfolio value on a daily basis. How are you dealing with this, Tom? Are you raising cash or are you buying more?
I think, Nikunj, as you rightly said, that of course you have to navigate while having a perspective on the long term. You have to navigate short term. You have to navigate day-to-day, developments. But I think the kind of environment we are in, I've seen it is pretty much similar to what we saw in some sense in early 2009 or in 2003. And I think so. It has happened before, and it will happen again. We have seen in market sentiments, going from euphoria to panic. And right now, the way I see is, it's an extreme state of panic. Of course, there are, real issues. So I'm not denying, I'm not wishing away there are issues. Economy is definitely slowing down, and there needs to be concentrated development or move by the government to kickstart the economy. But the good part is that you look at interest rates are coming down, oil prices are under reasonably good control. So there's a mix of the good things and the sort of terrible things. And that is where market is right now. So the way we've been playing it out, we've been watching situation every day in, day out. We are sitting on almost on 50% cash, and so we see there will be interesting opportunities to deploy capital over next 2 to 3 months. And I have said that repeatedly that this vintage of 2019 would be one of the best vintage, pretty much similar to what we had in 2014. And because today panic is at its peak. Every day you have new lows on more stocks, negative sentiments are high. So I think these are the typical good times to kind of build portfolios. But at the same time, one has to be careful, one has to be mindful of the fact that on a day-to-day basis what's developments happening on the economic front. So we are very cautiously watching everything.
Vikas, hi, morning. And in this caution, what is it that you're doing as an investor? Just folding your hands, watching the screen paint all red, or is there a strategy here in place? Is there a list that you're buying on dips, or at least keeping ready?
No, so what we are really looking for is, we are at an interesting juncture in the economy where whether it will improve from here or worsen further, right? These are, two ways it can go. And the really key difference lies in what are the concrete measures being taken by the regulators, by the government to revive the economy. And that is where the key lies. And hence there is no point in making one judgment and say this is the best time and go out and deploy full capital. You got to watch out, are there concrete measures being taken that will determine the speed of the recovery, that will determine the timing of the recovery, whether it will worsen before recovery. All those things are important. So we are really watching how and what steps are being taken by the government to kind of have the flow of credit into the system, how fast NBFCs can get back to lending, which is I think really a big issue, how automobiles can come, demand can pick up and recovery can happen. So lots of things you are watching on a day-to-day basis, but at the same time looks like that we are very close to the end. Maybe next 2-3 months will be more or less defining moments, and that will probably settle things down. We will be deploying capital only once we are comfortable saying that worst is behind and the right measures are being taken by the government to kickstart economy, to kickstart the credit flow of the supply of the credit flow into the economy, because to me that is the single biggest problem right now economy is facing.
Because, talking about the economy, what did you make of Anand Mahindra's comments yesterday sounding an SOS for the auto sector, saying it would also disturb the fiscal math if the government did not take measures to rescue the sector, so as to say? What did you make of those comments?
I'm sorry, I missed your question.
I wanted to get your take on what we heard from Anand Mahindra yesterday, sounding an SOS for the auto sector, saying that, the deepening crisis in the sector would also impact the fiscal math. Just wanted to get your takeaway in terms of, whether you agree that the slowdown is going to be perhaps even more severe than anticipated unless we see some solid measures being taken.
No, absolutely. I think I do agree that automobiles, we have had serious problems, slow down. There are job losses. In fact, some of the dealers are kind of facing the heat, and many of them are even kind of looking to shut down. They're really losing money because I think demand has almost gone to dropped significantly. So I think an automobile, real estate, these are the real sectors also create employment. So what we see is a vicious effect of playing out. First the credit supply reduced, then the demand reduced, and because of that product profitability improved. In fact, I won't be surprised if it is not addressed. The stress, I'm beginning to hear that stress in the SMEs getting built, and some of the we have seen in all the banking portfolio that the stress or NPA levels in the retail side has gone up. So these are the worry signs, and unless they are addressed in a very, very concrete manner, this can even degenerate also. And that's the reason I made a comment that one has to watch out situation every day, what steps are being taken, whether it will degenerate before revival or whether it will revive, and it really depends on what measures are being taken. Hence every day or on a regular basis you have to watch out what's going to happen to revive the economy. Of course, I am quite hopeful that government will do something, but we just can't be complacent about it.
So are you saying that it will get worse before it gets better, both for economy and for prices?
As I said, I don't know. It really depends on what measures are being taken, whether a coordinated, very big, aggressive measures are being taken to kickstart economy. If that is done, we might see a quick recovery. And if there's a sort of muted, slowed approach taken, which is the current case, it seems to be. So, then probably we might still see some more downside. I don't know. We'll have to wait and watch. Yesterday, RBI governor made some, move in terms of, on NBFC, relaxation on the NBFC side. But I think it takes time. By the time it percolates down in the system, real estate sector is starving for the capital, and that has created a lot of jobs, and job losses are happening out there. So that sector needs capital. Automobile needs capital. So a lot of sectors need capital, and that is where I think things are stuck. So we are not very sure. We will watch out and we will invest only once we get comfort that things are moving in right direction.
Okay. When you're watching out for that, point of comfort to get in, Vikas, is it purely from an earnings point of view? Would it also be from a valuation point of view? How would you balance the two currently? You've also been sounding, in this market at least, the most comfortable with consumption for the moment. Would that be your top theme?
I mean, we are, to be very frank, consumption and IT generally have been defensives, and but they are not kind of sort of reasonable in valuation. So, but you got to hide somewhere. So I'm sure most people are right now in some sense finding comfort out there. And consumption is one sector where you will come as and when economic revival happens, it also benefits. So you will do that. But specifically in a discretionary consumption side, we have seen a lot of correction happening across the board, and we would definitely look to buy them as and when the revival happens, because there you will get good recovery and good delta once the economy revives. So we would focus more on that rather than the kind of hugely overowned defensive staples.
Reliance fallen 20% because, I mean, the Reliance has got nothing to do with what is happening to the economy. The Jio business is independent, retail business is okay. They are a petrochemical company. They get money from refining margins and from petrochemicals. Those businesses are still intact, and yet the stock is down 20%. I mean, 20% means the stock is almost in a bear market.
Well, I think Reliance had a great rally before it fell 20%, for a long period of time. And right now, of late, we are seeing the concerns of high leverage, cropping up. Some of the sell side houses have written about it. So I think when these kind of concerns in the current market, anything around debt, any concerns around the high debt is raised, I think people will get spooked or people will get worried, and that's what is happening in Reliance. And I'm not saying it's not a genuine worry; it is a worry because as far as the Jio is concerned, you need to see cash flow, you need to see some sort of deleverage, and I'm sure management recognizes that as well. So it's because of that, and we'll have to wait and watch how this deleveraging happens. But I would say, I mean, we are quite positive. From a long-term perspective, both on the telecom business as well as the petrochemical business.
I was looking at some outliers here. Asian Paints, good numbers. Trent, Westside, same store sales up 12%. Bata, not bad. Marico, okay. Pidilite, good numbers. How does one read into these? I mean, these are small pockets, but yeah, these are pockets which are related with consumption. Shoe companies, paint companies, retailers, why are they doing well? I mean, do you think there is something wrong in the way we are understanding the economy and the way purchasing patterns are moving? Auto may be in a mess, auto ancillary may be in a mess, but Indian consumer is still buying and they're consuming different products. Instead of buying cars, maybe they are buying different things.
No, I'm sure there are different signs of, I mean, you get different signals, but I would assume more Asian Paint in some sense isolation. I would not see as a common trend in terms of consumption. Of course, it could be also because of the, correcting raw material prices. They would have done well. So I have not studied really in detail in terms of what are the specific reasons for these 2-3 names which you mentioned. But in economy, you will always find some dichotomy where it's not that consumption has come to a screeching halt. And sometimes in individual companies, it could be also possible that some initiatives being run by the companies in a tough time turns out to be well, and it could be inventory pipeline filling, it could be many more things. So I wouldn't read just one quarter and take it as a trend, and one would rather watch out. And definitely, there's no denial in the fact that there is a slowdown in the consumption in the economy. Now, whether the question to answer is, whether it will recover soon or it will take time. And some mixed pockets will always be there. It's like, you will hear some movies doing this phenomenal business in the same very slowdown period. Now, what does that explain? The fact that, it's not that, consumers have stopped spending. People would spend money, but it's just that, one has to look at a broader trend and connect the dots over a 2-3 quarter period to decipher on a particular trend.
It's great to have you on the show. Thank you so much for taking the time out as always. Quick revisit of what the market is up to. Pretty flat right now, a very tentative start like we had earlier indicated. So even that 0.5% uptake, irrespective of the crude cool-off of 5% overnight, that's not really cheering the markets. The breadth marginally in favor of the advances, but again, pretty tentative as we speak.